So let's get started with inefficiencies in insurance. Insurance is one of the largest markets in the world today in the financial market. It's part of the financial system or the financial sector, and it has, if you include all the different premiums available like life insurance, casualty, property, all the other different kind of assets or lives that can be insured, it amounts up to over 5 trillion US dollars. That's a lot of money. So it's a huge market. The top insurers are getting something like 100 billion in revenue per year. And online insurance or like online retail insurance is still quite new. It's only taking up $31 billion in the market share. So 31 billion out of 5 trillion, that's a very, very small slice of the pie. So it just shows that there is a huge room for growth because online insurance allows us to aggregate more data, get more information, underwrite more different types of risks, or have a better understanding of the different risks available to be providing the insurance coverage. And this is just online in general. In crypto and blockchain, which is an even smaller niche, that's another big untapped opportunity that we want to discuss today. So what are the different inefficiencies in insurance today? The first one, absolutely biggest one, is the lack of trust. Now, where does the lack of trust comes from? And it's not like, how blockchain is all about. With blockchain, we don't need to trust people, we trust the machines, we trust the smart contract, we trust the code, and then that's it. Yeah, it doesn't exactly work like that. You don't slap on a blockchain and then you resolve the problem. No. So blockchain aside, just the insurance market alone, there are a lot of problems with that because the insurer becomes the agent of the customer. So when I purchase insurance from a company, they become an agent of me because they should act in my best interest. But they also have other interests and other incentives out there. So now they have to figure out, I've got two opposing interests or two opposing incentives. I need to make the best choice. And for the insurer, they want to make the best for them. But they're also an agent of me. So technically, they should make the best choice for me. But their priorities comes first, so they don't always make the best choice for the customer. So there's some issues with trust over there. Not only that, insurers also decide how money is being managed. One of the biggest problems with the whole downfall of the AIG during the 2008 crisis was that the insurers had a lot of money, had a lot of funds, they did not invest them well enough, and people just went bankrupt because they put all their life savings there, but the entire insurance company just went bust. So that's it. There's a huge lack of trust over there because when insurers start to use their funds to prioritize their first order objective, which is their own benefit, then prioritizing people like you and me, like the customers, then this is where the whole lack of trust happens. We could use blockchain to solve it, but just adding blockchain as a technology over there, it does not work like that. Okay, there are a lot of other things to consider, which we'll dive into later. The second thing is opaque information. Insurance, I know it's a very old industry, right? But there's still a lot of information that's unknown. And that's the whole point of insurance. The whole insurance sector actually exists because there's opaque information. It's quite difficult to assess a lot of different risks, a lot of different information. And that's why we have insurance, to outsource the risks to someone else. So not only is it difficult to assess how safe the insurer is, is the insurer going to be bankrupt? Does the insurer have a lot of bad debts? How is the insurer investing money? Are they investing it wisely? Are they giving too much luxury trips to the top management? Some opaque information. But that's still, relatively okay because you can always have regulations to say you have to disclose this, that, and the other stuff. However, the real opaque information is in this thing called information asymmetry. Information asymmetry is where I have more information and you have less, or you have more information and I have less, because we have different kind of skill sets, or we have different kind of exposure to knowledge. Sure, knowledge is in abundance. You have knowledge everywhere. Just like in the crypto space right now or in the DeFi space, you have knowledge everywhere. Follow different Twitter threads, follow on Discord, on Telegram, on WhatsApp groups, on Reddit, on Facebook, on Bitcoin Talk, on all these different forums. Information is in abundance, right? But one person is not able to aggregate all the information at the same time or continuously aggregate and process the information. So there will be people who are very specialized in specific knowledge and they will have an upper hand in information. They can use this information because they have more information than you to exploit you. So then it becomes, imagine two people fighting in a tug of war. This guy has a lot more power because he drinks protein shakes and he goes to the gym all the time because that's what he does. And you're busy doing research in front of a computer every single day. So you have two different kind of strengths available, and you both are fighting along the same tug of war line. And the guy with very much information, very much gym time and protein shakes is probably going to win. So this is the same concept where in information asymmetry, you have this tug of war thing, and the person with more information is most probably going to win. And this is quite opaque because it's quite difficult to understand where is this person standing. At least if you have a real tug of war, you can see, okay, this person physically looks different. So maybe, we can find a better contender to be doing your tug of war with. But in insurance, you can't choose someone just like that because a lot of things are behind the information is hidden or the information is opaque. So opaque information is one of the problems. And lastly, one of the inefficiencies is the expensive overheads. You realize how insurance companies are always advertising, they are hiring a lot of people, there are a lot of insurance agents all around. Everyone is suddenly like CFA certified and CPA and all that kind of stuff. And everyone has all those acronyms on your LinkedIn. Well, the overheads in insurance is quite expensive. Of the $100 that you give in your premiums, only about 60 to 70% goes into the actual pool fund to be repaying or to be covering your costs when something happens. 30 to 40% actually goes to overheads. Stuff like marketing, stuff like admin, stuff like regulations, all these kind of very boring things which could be automated in the world today. We have machines, we have smart contracts, we have business logics that can be turned into code and automated. So this is an inefficiency that we can exploit, that we can find ways to reduce this inefficiency. Even if we could still have overheads because, sometimes for all these machines to be running, they need electricity, right? So you still need overheads, but not at a 30-40% price. That is very expensive. So these are some things that we could do. So at the end of the day, what we want to do, we don't have to remove inefficiency because inefficiencies will always exist. As we continue to evolve, as we innovate, as we have better regulations, we're going to have different types of inefficiencies that exist. But what we could do is to reduce inefficiencies in the system. So one of the ways that we are doing right now in the real world, in the physical world, in the banks world, in the physical brick and mortar shop, in the skyscrapers kind of world, we have rules and regulations. So this is where the government comes in to provide laws and regulations where you have to follow. So things will be like the minimum capital level, the different kind of very long and tedious governance processes, regular financial reporting, reviews, checks. So these are where third parties, which are usually trustworthy, things like the government, will say you need to follow, and then they'll be checking on behalf of the rest of us, which we don't have enough time to be checking each individual insurance information and portfolio, right? So we have all these rules and regulations in place. These are some ways to reduce inefficiency. There are other ways where we could embrace technology to be helping us in that area. And we'll look into that later. But before we go and talk a little bit more about the whole blockchain and DLT and how that's going to change the future, let's go back to our fundamentals, because the entire point of this is to always go back to fundamentals, go back to foundations, because these principles, these foundational principles, they do not change. Once we understand what these different protocols are being built on, what kind of foundations, what kind of structures they're being built on, it's a lot easier to make improvements, to find inefficiencies, and to build much better systems and much better incentive mechanisms in the future.